Welcome back to the Crypto Intellect, the channel where we cut through the noise, follow the data, and look at what is really happening behind the scenes in crypto. Today, we are talking about XRP, and this story is bigger than one candle, one chart, or one short-term price move. JP Morgan, MasterCard, and Ripple have already completed a cross-border redemption of a tokenized US Treasury fund in seconds instead of days. Visa is settling stablecoin transactions across multiple blockchains at a multi-billion-dollar annual pace. And the XRP Ledger has seen massive growth in real-world asset issuance, moving from a small base into billions in tokenized value. This is why the headline matters. Is XRP about to explode? And why are billionaires, institutions, and major financial players paying attention right now? Most people are watching the wrong number. They open the chart, look at the price, get frustrated, and ask why XRP has not already moved. But the price is not the full story right now. The real story is what is being built around XRP while the market is distracted. Tokenization is changing how assets move, how ownership is recorded, and how money settles across borders. When real-world assets like treasury funds, bonds, credit products, and other financial instruments move onto blockchain rails, institutions are not playing games. They are preparing for a faster financial system. And when those rails connect to Ripple, RLUSD, and the XRP Ledger, it becomes very clear why large investors are not just watching XRP for speculation. They are watching it for infrastructure. Tokenization simply means taking a real asset and creating a digital version of ownership on a blockchain. Think about a treasury fund, a bond, or a real estate product. In the old system, settlement can take days, involve multiple middlemen, and require banks to hold trapped capital in different countries. But with blockchain settlement, ownership can move in seconds, with a clear record, fewer delays, and lower friction. This is where XRP becomes important. The XRP Ledger was designed for speed, settlement, and liquidity. It was not built just to be another meme-driven asset. It was built to move value. And that is exactly the kind of system institutions look for when they want compliant, fast, global settlement. Now here's where this gets serious. For decades, banks have relied on Nostro and Vostro accounts. These are pre-funded accounts that banks keep around the world so they can settle international payments. The problem is that this system locks up huge amounts of capital. Money sits there waiting instead of being used productively. Ripple's core idea has always been simple. Use XRP as a bridge asset so value can move instantly without needing all that trapped capital sitting in advance. That is why XRP holders are not just betting on a coin. They are watching a possible replacement layer for one of the slowest and most expensive parts of global finance. And this is why the billionaire angle matters. Wealthy investors and institutions usually do not chase noise the way retail does. They look for infrastructure before the crowd sees it. They look for regulation, partnerships, liquidity, and real usage. When they see JP Morgan testing tokenized treasuries, Visa scaling stablecoin settlement, MasterCard connecting payment rails, and Ripple building regulated stablecoin infrastructure, they understand something simple. The next wave may not be about hype. It may be about rails. It may be about who controls the network where tokenized value moves. And XRP is sitting right in the middle of that conversation. RLUSD is another major piece of the puzzle. Ripple's stablecoin gives institutions a dollar-based settlement tool that can move across blockchain infrastructure. Stablecoins matter because they bring digital dollars into the system. But when a stablecoin operates on fast rails and connects to tokenized assets, it becomes more than a simple payment token. It becomes the settlement currency for trading, redemption, liquidity, and cross-border movement. If RLUSD keeps expanding across the XRP ledger, then every transaction strengthens the case that XRP's ecosystem is not sleeping. It is becoming more useful at the exact time traditional finance is moving on-chain. Atomic settlement is another concept every XRP holder should understand. It means both sides of a transaction settle at the same time. One side does not deliver an asset while the other side waits days to pay. The trade either completes together or it does not complete at all. That removes counterparty risk, cuts delays, and makes the process much cleaner for institutions. This matters for tokenized treasury funds, real estate products, credit markets, and eventually stocks, bonds, and other traditional financial assets. When people ask why XRP could explode, this is one answer. Because the use case is not just sending money, it is settlement for tokenized finance. The regulatory side is also becoming impossible to ignore. Institutions do not want chaos. They want rules. They want systems they can explain to regulators, boards, auditors, and clients. Ripple has spent years building licenses, partnerships, and compliance infrastructure, while many crypto projects focused only on hype. That may have felt slow, but in the long run, it could become Ripple's biggest advantage. When rules become clearer, compliant companies do not need to rebuild from scratch. They can move faster. And if XRP is already connected to regulated settlement flows, tokenized assets, and institutional products, the market may eventually have to reprice what XRP actually represents. This is also why the current market frustration can be misleading. Many holders only see the price moving sideways. They see other assets pump and wonder if XRP is being left behind. But institutions often build during quiet periods. They do not wait until retail excitement is at the top. They build when attention is low, when valuations are compressed, and when the public is tired. Then, when the infrastructure is ready, the narrative changes quickly. That is why XRP holders need to watch adoption, volume, partnerships, tokenization, stablecoin growth, and regulatory progress. Not just one daily candle. Look at what is happening across traditional finance. Exchanges are preparing for tokenized securities. Banks are testing deposit tokens. Payment giants are expanding stablecoin settlement. Asset managers are exploring blockchain-based funds. This is not one company moving alone. This is the entire financial industry slowly moving toward faster digital rails. And when multiple giants move in the same direction, the question becomes, which networks are ready for serious financial activity? XRP's answer is speed, low cost, settlement focus, and a long history of working with banks and payment providers. For retirement investors, this story hits even harder. Many people spent decades building savings, only to watch inflation eat purchasing power and banks pay tiny yields. Now imagine a world where tokenized treasury funds can settle in seconds, where ownership records are instant, and where global investors can access regulated financial products with less friction. That is the kind of future institutions are building toward. And if XRP becomes part of that settlement engine, then XRP is not just a speculative asset. It becomes a piece of infrastructure inside a much larger financial transformation. Now, does this mean XRP explodes tomorrow? Nobody can honestly promise that. But the setup is becoming more powerful. The market often ignores infrastructure until the results become too large to dismiss. First, the rails are built. Then the institutions connect. Then liquidity grows. Then usage becomes visible. And only after that does the broader market start asking why the price did not move earlier. That is the phase XRP may be entering. The boring work is already being done behind the scenes while most people are still staring at short-term price action. This is why the phrase "billionaires are buying XRP" gets attention. But the deeper question is why they would care in the first place. The answer is not emotion, it is positioning. Large investors want exposure before mass adoption becomes obvious. They want assets tied to future financial rails. They want infrastructure plays that could benefit from tokenization, stablecoins, global settlement, and regulatory clarity. XRP has been one of the few digital assets connected to that exact story for years, and now the world around it is finally moving in that direction. The most important point is this: XRP does not need every bank in the world to use it tomorrow for the thesis to matter. It only needs growing adoption, more liquidity, more real-world asset activity, and more settlement use cases. If tokenized finance keeps expanding, the demand for fast, compliant settlement rails could grow with it. And if Ripple continues positioning XRP and the XRP Ledger inside that environment, then the market may eventually have to look at XRP differently. Not as an old coin, not as a lawsuit story, but as a settlement asset for a tokenized economy. So when people ask, is XRP about to explode? The real answer is that the pressure is building. The chart may not show everything yet, but the infrastructure story is getting louder. Stablecoins are growing, tokenized assets are growing, institutions are entering, regulations are forming, payment giants are moving, and Ripple is still standing in the middle of the conversation. That combination is exactly why XRP holders remain focused, even when the price action feels slow. Now, I want to hear from you. Do you believe XRP is being quietly accumulated before a major move, or do you think the market still needs more proof? Drop your answer below in one word. If this video helped you understand what is really happening behind the price, hit the like button, subscribe to the Crypto Intellect, and turn on notifications so you do not miss the next update. This is not financial advice. Always do your own research and make decisions based on your own risk. Stay informed, stay patient, and stay positioned. I will see you in the next one.